Hi guys, welcome back to my channel. In today's video, I'm going to go through the top 5 biggest trading mistakes that beginner traders make. So when you first start trading, there are a lot of things to deal with. So there are a lot of hurdles that you are going to have to get past as you go into your trading journey, as you gain more experience, as you experience different strategies. You're always going to come across some type of hurdle that you need to get past. So the ones that I'm going to go through with you guys today are ones that I've experienced myself very heavily. These are the ones that I really struggled to get past when I was a beginner in my trading journey. And even now, as an experienced trader, it does sometimes come back and creep up on me. I've also seen a lot of my following and a lot of my students also go through these specific issues in their trading journey as well. So I think it's a great way to kind of give you guys some tips and tricks on how you can potentially get past those hurdles. The first one is overtrading. Overtrading was such a huge issue for me going into my trading journey. I always felt like I had to take more and more trades, and instead of focusing on the quality of my trades, I was just focusing on taking as many trades and catching as many moves as I could potentially catch. Now I veered away from that and I focus on the quality of the trades that I take, the percentage gain, and not the P&L and the number of trades that I take, nor do I try to catch every single play that comes in the market. The problem with a lot of beginner traders is they try to catch every single move, and that is the issue. You always want to make sure that you're only watching about 2 to 3 tickers per day. That way you're not getting overwhelmed with too many moves. You focus on your 2 to 3 tickers. If they move, great. If they don't, you move on to the next day. The problem with a lot of beginner traders is that they'll see a stock that's not on their watch list moving just because, maybe someone in the Discord mentioned it or someone on social media mentioned it, and they immediately veer off of their watch list and go towards that stock and try to catch that move. Usually what can happen is if you don't have a plan for that ticker and that was not on your watch list, it can hinder your overall trading and you can potentially take a loss. Some tips on how to stop over trading is: 1, always make sure that you have a watch list. Like I said, 2 to 3 tickers max. Understand the price action of those tickers and make sure you have a trading plan for each of those tickers. When I first started trading, like I said, I would try to catch every single move. Now I only focus on the tickers that are on my watch list. If anything else moves in that day, I don't try to catch it. If it is not on my watch list, I'm not going to try and trade it because I don't have a trading plan for that specific ticker. Another thing you guys should understand is to focus on percentage gain rather than P&L value. I could potentially take the same trade as a beginner trader. You're risking $1,000 on that trade. I'm risking $10,000 on that trade. It was a 50% move. Just because my P&L is higher doesn't mean that I took a better quality trade than you did. We both had the same percentage return on that specific trade. So that's why I always tell all of my students, don't focus on your P&L, focus on your overall percentage gain for that specific trade or the overall day that you have. If you're making 2 to 3, 5, 10% of your account, you don't need to be consistently trading. 10% of a $100,000 account is $10,000. So you don't see it as much on a smaller account. Another thing with overtrading is, let's say you take 2 trades and they're both green. You see another setup and you want to take that trade as well, and what can happen is, let's say that third trade is red. Now emotionally you are attached to your P&L and you remember, hey, let's say I was up $1,000 that day. That third trade I lost $300. Now I'm only up $700 on the day. Subconsciously, traders want to then go back to their original P&L, and that will force you to take more plays even though there's not setups there. So you always want to make sure that you understand that it's a lot better to walk away with 1 or 2 good quality setups than go from green to red to green to red to green to red, and then you're mentally exhausting yourself as a trader, and it's just going to hinder your trading in the long term. The second mistake that I see a lot of traders make is not having a trading plan. You always want to make sure, no matter what you're trading, no matter what day it is, you always have a trading plan. A trading plan is going to keep you not only patient and disciplined, which I think are the 2 biggest pillars of a good day trader, is being disciplined and being patient. And for me, I really honed in on that once I started having a trading plan every single day and sticking to that plan. Key is to, like I said, find 2 to 3 tickers that have news behind them, that may have volume behind them, that have something going on, usually a catalyst behind the ticker that's going to give the ticker momentum to move. You want to make sure that you have a trading plan. A trading plan is going to consist of an entry point, a stop loss, and usually I have 2 profit targets just in case the stock does want to blow past my first profit target. I can scale out and hold some runners. If you don't have a stop loss, you're going to end up bag holding and you're going to take a bigger percentage loss than you would have if you did have your stop loss and you followed through with your stop loss. If you don't have profit targets, you will become greedy. And I have seen this happen before. If you don't have profit targets to the upside or you don't follow your profit targets, what will end up happening is you will become greedy and you will end up sometimes even taking a loss because you didn't take profit at that first level. And to this day, I struggle with taking profit when I'm supposed to take profit. So it's a really, really important and key element to a trading plan is making sure that you know when you are going to take profit. If you don't know when you're going to take profit, I promise you, you will end up bag holding, you will end up getting greedy, and you could end up red on the day as well. Without a trading plan, you are more prone to making mistakes, more prone to not staying disciplined or patient in the market. The third mistake is poor risk management. Risk management is something that a lot of traders don't try to understand going into their trading journey. Risk management is a topic that a lot of traders just try to overlook and not understand how to manage their risk in order to become profitable on the week or the month. Good risk management can help you turn a red day or a red week into a potentially big green day or a big green week. If you manage your risk properly, if you are sizing properly in the trades that you take, even though in the beginning of the week you may have taken 1 or 2 red trades, you can still end that week very green if you stay within that risk exposure that you are used to. For example, this week was an FOMC week. I ended up being red on Monday and Tuesday, just not being patient and not being disciplined enough. I waited until Powell was speaking on Wednesday. I capitalized on some really good moves Wednesday and yesterday, which was Thursday. And now not only am I up on the week, but it is probably one of the best weeks I've had in a few months. And we still have today to go into it. So today, because I am up on the week, I did have a good week, I'm going to risk off. I built back up that initial loss I took this week. So why would I overexpose myself in the market when I know that I am green on the week? I did hinder in the beginning of the week and I was able to make it back. So you want to understand when to risk on and when to risk off. So let's say you have a $5,000 account. How I would break that account down is either 5 $1,000 trades or 10 $500 trades. That doesn't mean that you necessarily have to take all 5 trades or all 10 trades, but this means that you are managing your risk and you're exposing just enough to be able to make that loss back if you do end up taking a loss on the day. Fourth mistake that I see a lot of traders make is using too many indicators. Now, I'm not saying that all indicators are bad and all of them are, not useful. There are some indicators that are very useful. However, they should be used as a guide. The issue with indicators is that they all require historical price action to be able to chart that indicator, which then means that all indicators have a lag. There is not one indicator, no matter what anyone says, that is going to tell you when to buy and when to sell specifically. I was one of those traders when I first started as well. I just had every single indicator you could think of: MACD, RSI, ATR, ADX. I've used all of them, and the only ones that have lasted throughout my trading journey are my moving averages, my VWAP, and my volume average. Those are the only 3 that I use, and I use them as a guide. I don't use them to signal an entry point, to signal an exit point. I use them as a guide. For example, with moving averages, I use them as a guide for a trend. VWAP, I use it for support and resistance levels or a trend as well. And then obviously paying attention to volume in conjunction with time and sales and level 2, not just the volume average itself, but using it in conjunction with what I see on level 2 and times and sales helps me assess if there is momentum behind a play for me to be able to take it. There is no easy route in trading. Everyone goes through the same mistakes. Everyone goes through the same issues. So don't feel like the usage of indicators is going to help you find an easy way in this journey, because it is not. Learn to chart properly, learn to assess support and resistance, supply and demand zones. Actually learn the ins and outs of the market, of price action, what your strategy you're looking to implement. Focus on one specific strategy and just rinse and repeat, rinse and repeat. You don't need any indicators to tell you what you already know. And the last mistake that I see a lot of traders make is being too confident, so overconfidence. Now, I'm not saying that you shouldn't be confident in your setup, in the knowledge that you have, but there comes a time when you have had, let's say, for example, a couple good winning days, or you're on what some people like to call a winning streak. I don't like to use that term because that gets to your head. And when people are on those streaks where they are taking really good high probability setups, or the market is really giving you good price action and you are able to capitalize, what happens is at that point you feel like you can either size up, you feel like you can take more setups that are not really there. You can deter from your strategy, and that's when people get a little too confident in their trades. They stop following their rules, they stop following their strategy, they stop following their trading plans. And when you stop doing all of that, you've lost all of your discipline and your patience in the market. And then at that point, you are then going to take a loss. And what can happen is you can potentially spiral. So there has to be a good medium between being confident in what you know as a trader, being confident in your strategy and your trading plan, and then being too confident and overconfidence and getting a little cocky in the market, because the market always has a very, very great way of humbling everyone. You may have an amazing month. Price action may be great in the market, but price action shifts. The market changes and you need to be able to adapt. So the best thing to do that, or best way to go about that, is making sure that even though you are profitable, that you understand, hey, this is my strategy. I'm going to stick to it. I'm going to stick to my plan. I'm going to stick to my rules. I'm not going to deter from that no matter how profitable I am in the market. I'm not going to get too cocky in the market, because like I said, the market will always find a way to humble you as a trader. Hopefully this video was helpful. If you guys have any comments or questions, go ahead and comment them down below. If you have experienced any of these, understand that you are not alone. Every trader goes through these issues. The best way to go about avoiding these issues or getting through these issues as a trader in your trading journey is understanding what you're doing wrong and rectifying those mistakes. Again, going back to being disciplined and patient and following all those tips that I gave you guys today. Hopefully this video was helpful, and I will see you guys in the next video. Bye.